Hi, the Gordie Sorensen here with Remax Home Group and Twin Power Team, and today I want to do another edition of Gordie's Corner. Today I'm going to talk about opportunity, and opportunity strikes in a lot of different ways, and it strikes for homeowners and people that are looking to buy and sell. It also strikes in the opportunity of a business and business rental property and a business investment ownership and so on. First, home ownership. Say you're out looking at houses and we've been looking and we aren't quite ready yet, or we don't think we're ready, but then we walk into the right house. So that is an opportunity, and it's an opportunity that happens kind of right away. And we need to be ready to act on that opportunity. So sometimes we just need to take our best gut instinct and be able to recognize that sure, the grass is always green on the other side of the fence, so we're always gonna be thinking, geez, did we let something go, or did we not wait for something that was better? If something meets 80-90% of your criteria, if it's the right fit, if it just feels right, it feels like home, and you feel yourself being able to move in there, then that's the opportunity. And sometimes you just need to jump on that opportunity and take it. And in today's market, with high demand and low inventory, you especially need to jump on those opportunities and make it happen. Now let's talk about business opportunity. Business opportunity in the form of real estate investing, which real estate investing is still the simplest way for somebody that maybe still works another job, has a whole nother career. But to own a rental house or two is a great opportunity to better your future. And by that I mean, and I always say, buy the neighbor's house. And by that I mean that we've worked with a lot of couples that have done the right thing. They've bought a house, they've stayed in it for 30 years, they fixed it up nicely. We get ready to sell it because they want to move to a condo, or maybe they're moving on to the next thing, or maybe they're moving to Florida, something. But so we do that, and we get in there and we look at their house, and maybe it's worth a couple $100,000, give or take. And they did the right thing. They paid it off. They have it, they have it free and clear, let's say. But $200,000 minus some of the costs of selling and paying the taxes and everything that you have to do to the property taxes, that is, makes it so that it's hard to make that next move into where you want to go. And if you haven't had a mortgage for 10 years or 20 years or longer, it's hard to think about or fathom getting into another place with a mortgage. So by buying the neighbor's house, what I'm saying is, if you're watching this video and you're 50 like me, or 53, or younger, 30, whatever, and maybe you live in a house and you're doing pretty good, and things are fine. If you owned the neighbor's house, now when you go to make that next step someday in the future, then you sell two houses, it's much easier to make that leap into somewhere where you might want to go. So think about that as an opportunity. An opportunity to, when I say buy the neighbor's house, sometimes that's literal, but sometimes it's just, what if we just had one rental house? And remember, on a rental house, and we'll do more about investing, and I know Gerald's done a bunch about investing, but I can do another little short, actually 1 or 2 minute video on the basic nuts and bolts of investing, and maybe I'll do that next time. But by having that, but the tenant pays that off. Even if you don't make a lot per month, and you make a couple $100 per month, and it's enough just to go over there and to do some of the maintenance and keep the house up and so forth, it will eventually be paid for by that tenant. And it's super easy to buy one if you just live in a house now and you're current and everything's good and you have a normal type life, middle class life. It's easy to go into a lender and borrow money to buy one more. That's pretty simple. And if you can turn that into an investment property and turn it into a profit margin, then it's even better. But remember, the tenant will pay it off, and in 20 or 30 years, that thing will be paid for, and you'll have two houses to sell, and then we move to the next thing. It's so much easier. Hey, that's it for today. I know we're running out of time. I want to keep these short as possible, so I'm going to head out, but we'll do another session on investment property, and certainly call with any questions about that or with the idea I just threw out there today. And if you have any questions on that at all, just give Gerald or I a call, or one of our team members a call. So thanks again. Have a great day.